Welcome back to the Great British Breakfast. 26 minutes past 6. Now, economists are urging the government not to introduce another lockdown, saying its consequences could be severe. A leading advisory from KPMG warns it could raise the unemployment number to 2 million people. Even Plan B restrictions, they say, introduced in the coming days could cost the UK economy billions as millions return to working from home, according to an economics fellow at the Institute of Economic Affairs.
Well, let's try and make some sense of this. Joining us now, Andrew Sachs, Head of Media and Analysis at ETX Capital in London. Very good morning to you, Andrew.
Good morning.
When it was announced last night, what was your reaction?
Well, it was really not surprising, because if you look at the European and certain other parts of the world, there were partial lockdowns and some return to restrictions brought in a few weeks ago. And up until last night, the UK was relatively free of those. But it was kind of relatively inevitable that they would start to impose them. But of course, things are very different this year, because I don't think we're going to see the level of compliance that we saw last year.
What do you think is the cost of putting in place Plan B? Can we actually really quantify that?
Yes, we can, and I think it's a huge cost. Last year, what's really worth considering is looking at last year's economic fallout from the lockdowns that were imposed across the UK. There were small to medium-sized businesses were really badly affected, particularly those which did not offer an online service, those which had to rely on customer footfall or them actually going to a customer premises to work on site. They had to shut their businesses down. They were considered really obnoxiously by the government non-essential. I mean, surely all businesses are essential. And it cost the economy a huge amount, and now we can actually see the cost of it. So it all opened back up again to some extent. And then recently in Europe, there were some partial lockdowns brought into place. So that was a good measure, when you bear in mind that the smaller to medium-sized businesses were the ones that really lost out last year. Some of the blue-chip big companies, public listed companies, really accelerated and got some lucrative contracts with government departments and switched from the private sector to the public sector and did very well. However, now we can, we can now analyse the previous data. When the partial lockdowns started to come back in Europe last week, and President Biden in the US is talking about bringing in curbs and restrictions, the UK didn't have any of those. No one was talking about that. Yes, they talked about masks and they talked about something. They didn't actually talk about curbing any activities. So what happened was the European indices in France, Italy and Germany mostly went down. Investor confidence in them became lower because they were considering the potential impact of lockdowns. Whereas the FTSE 100 in the UK for the last 3 days until yesterday was on a 3-day surge. And the US dollar is at a 1-month low against the pound. So you can see actual investor confidence in the big business now starting to worry about the impact on big business.
What struck me watching yesterday was there was no end in sight. This is where we're headed, and it's down. The other thing was no mention of a furlough scheme or anything to mitigate. And going back to that point about compliance, if you're a small to medium-sized business and you're on the edge, you're not going to work from home, are you?
Absolutely not. No, you're not. And I think there will be much less compliance this time. You can see it really around already. However, if you really want to take private property from people and turn it to the government, that's how you do it. You buy them by paying them to stay at home for a while. It ruins their businesses. It takes the whole market sector away. And then you suddenly say, oh, we can't pay you anymore. And then you have complete government ownership of what was previously private property.
That's very dark.
It certainly is. But if you think about it, that kind of is the way things are starting to go.
Some businesses have been remarkably resilient, flexible, adaptable, and many of them will be motivated actually to think, we don't want our staff to get coronavirus. That will be 10 days at home, out of the office, potentially completely unable to work. Maybe we've just got to pull our socks up, get flexible and just stick at it for the next few months.
Yes, absolutely. I think some are. But I do think there's a concern here as to how much longer it will go on for. You know, we've had these revelations, which are all over the front page of all the newspapers this morning, which show that over the last year or so, it isn't just Mr. Hancock who was disobeying his own rules. It's actually the various members of the government and who knows who else around the world. It's just that they got caught. So this is a real indicator to show that if there is some deadly virus, obviously the government isn't concerned about it, but we should be. So businesses might worry that they are sacrificing their potential continuity on the basis of something which isn't really very credible.
The other thing yesterday in the news conference, the comparisons constantly drawn with what's happening in South Africa. What struck me is South Africa has nothing like the level of vaccine cover that we've got, and yet suddenly we're supposed to be going down the same road.
Absolutely. And South Africa is I worked there for many, many years, and South Africa is a world leader in vaccine research. There are lots of medical companies, technology companies, including Discovery in Johannesburg, which have invented incredible breakthroughs in vaccine technology over the years and are massive blue chip companies because of it and worldwide respected. So if some of their top scientists are saying this, then maybe it's really worth listening to them.
Andrew, fascinating. Good to see you.
Thank you very much.
Thank you very much for your time.